I'm Greg Hunter. Welcome to USAWatchdog.com. With us, again, a reoccurring guest, one of my good friends who helps me a lot, especially with the financial side of covering the news in the weekly news wrap-up. He runs TradersChoice.net. The site is entirely free. Of course, I'm talking about Gregory Mannarino. Gregory Mannarino, the founder of TradersChoice.net. Gregory Mannarino, thanks for joining us today on USAWatchdog.com.
Great to be back, Greg. Thanks for having me. I really appreciate it.
Well, I like having you on, and we talk all the time. You were just talking about that in the pre-interview, and one of the things you came up with this week was, hey, man, you called me on Thursday, and did you see the bond market sell off at the open and the stock market? That's unusual. If we had a real market, the whole thing would be rolling over. This is ominous. Friday of last week, again, the bond market rolled over right at the beginning. What do you suspect is going on? You think you were the guy that said, this is going to take off after, Donald Trump got elected. This is a big sea change. This is a game changer. I believe that was your name, the way you put it. Now, it seems to me you're increasingly worried. What's going on with the bond market and the stock market selling off on Thursday and the bond market selling off again on Friday? What's going on?
I'll tell you, Greg, I think people have to pay attention to this. And you know better than anybody else, because, again, we do talk all the time, that you have to watch the action in the bond market. Everyone's looking at the stock market. That's what the mainstream financial channels want you to look at to keep you distracted. But the bond market, which is the biggest of them all, the debt market, one and the same, a lot of people don't understand that. That's where all the action is going to start before it bleeds off to everything else. This is how traders like myself who know what they're doing stay ahead of the market. It's that simple. I'm not sitting there staring at the stock market. I'm watching what the bond market is doing, and then that will give me a heads up as to what more than likely is going to follow through with regard to the stock market and everything else. As a matter of fact, people don't understand how important the bond market is, and that's why world central banks have chosen to take that aspect of the market, and artificially suppressed interest rates for now nearly a decade here. But the sell-off in the bond market that we've had over Thursday and Friday really, to me, says there's something here that we have got to pay attention to, because not only did bonds sell off, I want people to pay attention to what I'm about to say. We saw the bond market sell off at the same time the stock market was selling off. That is unusual in this environment. We have not seen this type of action in as far back as I can remember. Generally, when this happens, when the stock market falls under pressure or it gets anxious or nervous or something like that, you see cash move back into the bond market. So when you have a simultaneous sell-off here like that again should make people say, whoa, what is going on here? Because now we got cash leaving two markets. Where is it going is the next question. And that's kind of how I think all the time. I say, okay, we got cash coming out of bonds rapidly, by the way, and I mean rapidly. It rattled the markets a little bit, no doubt about it. As a matter of fact, CNBC was forced to talk about it, although they have been trying to avoid this. They don't want people to hear this kind of stuff. They have to cheerlead. Okay.
So you were telling me that one person actually did bring it up, and boy, they shorted him out pretty soon. Tell me about that.
Yeah, it's kind of funny. I actually, CNBC, and I'm pretty hard on CNBC. I know a couple of these people that work there, and I don't know if they like me very much anymore, but I've been kind of hard on these people. But the truth of the matter is, they can't allow people to really see what's lying underneath everything. They're going to fluff it all up, but they had no choice but to start talking about the bond market. They mentioned it a little bit on Thursday and then a little bit on Friday as well, saying, hey, what's happening here in the bond market? Is this something? And here's the kicker, what really gets to me. One of the commentators, as a matter of fact, it was Melissa Lee, she came out and started talking about it, and then the bond market, then all of a sudden it just goes silent. It goes silent. No one says a word. It's almost like they got a buzz in their ear. Don't talk about it. Don't talk about the bond market. But it's incredible. It really gets under my skin here, Greg. You know that better than anybody else because, again, we talk all the time. I can't stand how these people are out there and not allowing people to make up their own minds to see the big picture. And the big picture, without looking at the bond market, I don't care what the stock market is doing. You have to watch the bond market first. It's tremendous. And this could be the beginning of something. Now, look, I'm urging people not to listen to Greg Mannarino. I want you to start listening to people like multi-billion-dollar hedge funds who sound exactly like Greg Mannarino, or former Fed Chair Alan Greenspan, who sounds exactly like Greg Mannarino, warning about the bond market. You know, it's unbelievable. So maybe we're starting to see something here, and I can promise you that we're gonna see a lot of action here in the market, and we've been seeing it past Thursday and Friday. That is very, very suspicious. For example, they tried to prop up the small caps. It didn't work both days. They tried to prop up tech. It kind of worked on Friday with the Nasdaq eking out a tiny fractional gain here, although the Dow did finish it down. But I believe sincerely that because we have such a managed market, Greg, and you know, it's no secret, central banks are buying up the stock market. The major banks are buying up the stock market. This is common knowledge now. We have central banks.
It is common knowledge. You could just say
it's common knowledge. People know this. I mean,
Draghi said it. Go ahead.
Say that again.
I mean, Mario Draghi has said it. We're buying stocks. We're buying bonds.
Oh,
he said it.
Oh,
the Japanese buying stocks. We're buying bonds. The Swiss. The Swiss have a ton of U.S. stocks. The Swiss National Bank.
Almost $100 billion in U.S. stocks they're buying, and I can promise you that they're not the only. Every central bank is doing this. Not only are the central banks doing it, but the largest banks in the world are doing this too, Greg. You know, look, what I want people to understand here, and I would imagine that most of your listeners are well aware of this. We have central banks managing the debt market. We have at least five of the world's largest banks rigging gold. It's common knowledge. Look it up on Wikipedia. The London Gold Fix. Please Google this, everyone. They
paid fines.
They named the banks who are rigging the market. It's common. Imagine, for example, Greg, that, I don't know, Apple stock was being rigged or having its price fixed by the banks. Could you imagine the outrage? It would be off the charts. But, you know, there'd be regulators there in 2 minutes. But with this actually right in our faces, they're fixing the price of gold. Nobody bats an eye. Why? You know why. It's because they cannot have gold competing with the dollar on the stage because it would threaten the petrodollar. I mean, it's so simple. So they're going to keep rigging this as long as they can. So, real quick, let me put this together. Central banks rigging the debt market. You got these major banks rigging the gold market. And the stock market's sitting right here in the middle, and it's also being rigged. So what you and I have been talking about, which seems like, since I know you, is how everything is fake and nothing is real. There's no price discovery mechanism, Greg. That is the most frightening thing I want people to understand. When they're trying to gauge the value of anything at this particular point, it's not real. It's all being managed. And there's going to be a moment. I don't know when that is. I don't even speculate. When the market does its one and only job, and that is to determine fair market value. It's not being allowed to do that. That has created distortions of magnitudes that I can't even comprehend. And I think about this stuff all the time. It's beyond the scope of anybody. No one's smart enough right now to know the true value of what debt is right now, of what gold is right now, or the stock market. All of these things are so pulled and stretched away from their fair value that it's frankly frightening, because we're going to get a return to a fair value at one particular point. And I'll tell you something else. I know I'm going off here, but the free market's going to be blamed for it. It's not the free market. It's because we have a managed market. If we had a free market where the price of assets was being established by market forces, well, then we would have a real market. But if we have all these things that are going on that I just outlined for you, we do not have a free market anymore, and it's very frightening, very frightening.
I wanted to talk to you a little bit about gold. Zero Hedge last week was reporting that that they dumped 400, what was it, 4 billion in notional value on the gold market. And you know what I found weird about that? It only went down. It only closed down about 11:30 for the day. It's up for the week. What do you think about that kind of intervention and not getting a big result? It just seems to me like this stuff is wearing off, like it's not working anymore.
Well, you know what? We've seen this before. I talked about it on my video blog here, and how they do this is so, again, blatant. These entities, whoever they are dumping paper gold onto the market using market orders. Now, let me talk about what that is real quick. When an individual or an institution wants to either buy or something in the market, and you put in a market order, that means you're willing to pay anything for it if you're looking to buy, or sell it for whatever you can get. I mean, it's like me taking my Mercedes, putting it outside and putting a sign that says, okay, I want to sell this, and I'm willing to take whatever you want to give me. I don't care what it is. Just take this off my hands. So this is done to manipulate the markets, and we've seen it over and over and over again, and we're going to continue to see that. Again, the market is going to dictate fair value at one point. There's no doubt about it. But they are going, these central banks and these banks that are involved here, look this up. I'm urging people to look up the London Gold Fix. They are going to lose control at one point, just like the Fed is, and just like other world central banks are with regard to the markets that they're manipulating to.
By dumping this much gold onto or paper gold, I should say, by dumping this much gold onto the markets, is that a sign that they're losing? I mean, that gold should have been on $50. I mean, gold should have been on $100 if they dumped $4 billion. Nobody's got $4 billion of gold sitting around. This was, they just invented $4 billion of gold to sell, and they dumped it on the market. They only got it to go down $11. Yeah. I mean, is that a sign of this losing steam that people are calling BS on the BS, and it's all strong hands holding gold?
It very well may be, because I know that at one point the free market forces are going to win. I don't know when. I don't care when. I'm just trying to capitalize on this and let everyone understand what's going on so they can do the same thing. Absolutely, Greg. There is no doubt whatsoever. None. And
that's your read too, though. I wanted to find out, is that your read too? Because it seems to me, wow. Zero Hedge reports $4 billion dumped, and you get $11? I mean, if they're trying to drive the price down, that's not what they wanted. They didn't want $11 for a $4 billion plunge.
They're trying to scare people. That's all they're trying to do. They're trying to shake people out of it. Look, for anyone to believe, really, that the price of gold, the price action of gold right now is what the market is dictating, because it's not really the market, has got to be insane. The real price of gold, in my view, today should be close to $8,000 an ounce. And silver should be probably $500 an ounce. So these are the real prices based on the ever-expanding debt. But again, they are so desperate. Again, they're fixing the price. They're rigging it. It's incredible. And then we're not done seeing. They're going to do everything and anything they can to keep this propped up until they're ready to kind of just, I guess, let this whole thing go. And that's when the middle class is going to receive a fleecing unlike anything they have ever witnessed, has ever been witnessed in world history, to the nth degree. And I think that's really the general setup here. I can't imagine this going another way. And it's just ugly, Greg. You know that.
How much of this is the Senate and House bill for tax? It just seems to me that they don't really want to cut taxes. They're going to cut them for corporations, I guess, which is good. But small business is going to take it hard, and it's not going to grow that many jobs. That's the big engine for job growth. But, the Senate comes up with, Mitch McConnell, he ought to be embarrassed. Comes up with a 450-page tax bill. How much of that, if we don't, and I don't think they're going to get, if they get something, it won't be much. They're talking about putting off the corporate taxes next year. How much of this is the what they're doing in Congress?
There's no doubt that it's playing into it. I think a tax cut was priced into this market, and the market, I believe, is still, they're propping it up here. But if we do not get something meaningful along the lines that the market is already priced in, The action that we've seen in the bond market is going to get a lot worse. The action that we've seen in the stock market is going to get a lot worse. There's no doubt about it. This has been priced into the market. I think we could see all of these markets, including the dollar and everything connected to it, react violently if something favorable like the market wants to see does not come through here. We probably will continue to see the debt market sell off like it is, and it's just such a simple concept to understand. If this continues, if we keep seeing bonds being dumped like we saw Thursday and Friday, what does it mean for the regular guy or girl listening to this right here today? It means interest rates are going to spike rapidly. If this happens, we've seen this before, the stock market doesn't like this. The rates will go up, stocks will sell off at the same time like we're seeing now, but much more violently. And then that cash is simply going to move. It's going to go into other assets. Right now, that's what we're seeing. We're seeing cash kind of get pulled out of stocks, getting pulled out of bonds first, and coming out of stocks. It's kind of waiting. It's waiting to see what it wants to do. It always does the same thing. You can watch this every day like I do in real time. So the market right now, this load of cash is just waiting for somewhere to go. And I'm going to be watching it come Monday morning to see where it looks like it wants to go, and I'm going to get right in front of it, and I'm going to be a happy guy by the end of the trading day. I can promise you that. But it's really the truth here, Greg. We're witnessing things politically, geopolitically, that have the potential to affect every single person who's obviously not paying attention to these things because they're being distracted by the most, frankly, asinine things in the world. But again, they're going to wake up reasonably soon, in my opinion, and maybe we're starting to see the beginning of it now. I really don't know, but we're going to watch it moving forward.
Is this what Greenspan was worried about? He was worried about the bonds selling off and rates bidding higher and going up rapidly, is what he said. Spiking is what you and I would say. Is that what you think is, if we have another Monday, Tuesday, like Thursday and Friday of last week, I mean, things could get out of control. Things could get out of control, could they not?
And quickly, there's no doubt. If this, let me just say this for people that want to pay attention to this. If we see another sell-off come Monday, Tuesday, if we do not see the bond market start to stabilize here, there's going to be trouble. There is going to be trouble, Greg. I want people to look.
Wait, stop. When you say trouble,
yeah,
does that mean that the central bankers could get overwhelmed by the actual market?
Will. There's no doubt about it. They can't buy everything. They can't get in here and start buying all this stuff. The Fed's already talking about normalizing their balance sheet. Oh, okay. So what are they going to do all of a sudden? They may be forced to do it, but the market is going to overpower any central bank. They cannot sit there and print cash out of thin air forever and buy everything. Why not? It'll kill the dollar. We'll watch the dollar value evaporate overnight. Can't happen. So there's always a cause and effect. With everything has a reaction to it, and that's what's going to happen here. And I'm going to say this right now on your show, Greg. If we see this come Monday, if we see a sell-off Monday, Tuesday, whatever, and this doesn't stabilize, look out below with regard to this stock market. I'm going to tell you right now, what's this guy going to do? I'm going to short every index that there is. I can tell you right now. There's no doubt about it. People need to watch the bond market, like I have written behind me. I don't know if you can read that. Watch this bond market. Greg, let me just say this real quick. On my website, traderschoice.net, for which you alluded to, I have real-time charts. This is all for free. Just take advantage of this. There's a chart of the total bond market on the right side of my page, just under the chat room. You can see this in real time. If people are watching this on your early Sunday release,
yes,
they can see the bleeding off of the stock of the bond market. It's right there. And you don't have to be a chartist. You can just see it looks like it's bleeding. If this goes on through till next week and we do not see this bond market stabilize, there is big trouble ahead in a quick way. I can promise you that.
I wanted to bring up the bond default. They are officially in default. Venezuela officially in default. Here we have another. Puerto Rico not paying. Venezuela, we're not paying either. There's several states in the union that I at some point, either they're going to say we can't pay or they're going to get a bailout. all the spiking interest rates will increase that. What does the Venezuela situation mean in terms of what's going on in the bond market? I mean, we have unbelievably low rates, and they can't even make the interest payments. What's going on? What does it mean that Venezuela just said, "Oops, can't pay"?
No one can pay. Look, this whole Ponzi scheme of debt being borrowed into existence in perpetuity in greater and greater amounts has to come to an end at one point. And maybe we're starting to see this right now. The debt can never be paid back. And the fiat currency, the dollars, are part of that debt. It's a frightening prospect here, Greg, to put this into a perspective, understanding what we might be seeing, a little light through the door, a little darkness, however you want to look at it, come through that door when we're looking at South America over here, because this is going to sweep the globe. Like I've been telling people for years, okay, that we are now underneath an umbrella of debt, which can only get worse. It can never be paid back. If we know that this is going to continue to expand and it can never be paid back, there's going to be a moment of implosion when the debt-based economic model cannot function anymore. And then everything grinds to a halt. That's it. It's party over. It's no cash from the machines, no cash from the bank, no access to anything at that particular time. People in Venezuela, they're eating the zoo animals. They're eating zoo animals because they have no food. It's incredible. So this is a scenario that the world is going to face, and I don't care where you live. You live in Beverly Hills in the United States, you're probably the biggest target of them all, because I can promise you that throngs of people are going to come right to your house, right to your neighborhood, and take whatever they can from you just to survive. We have to always look at this thing, Greg, in a worst case scenario. In a worst case scenario, if we're starting to see this debt market melt down around the world, this is going to lead to a correction in the human population, because the bubble in debt is what has allowed the population around the world to explode and grow exponentially. If we can no longer borrow from the future, like we've been doing to create this false environment, it's all going to implode. And again, it's a horrible prospect, but we are in a human bubble right now, along with the debt bubble, Greg. It's going to be biblical. That's all I have to say. It has the potential to be biblical when this comes down.
And this bond market sell-off, people are saying, I want my money. These people aren't going to pay back the debt. Venezuela just defaulted. Maybe that's part of it. Puerto Rico's defaulted.
Pension plans, think about it.
So they're just saying, I'm out. Give me my money. I'm selling now. They're early adapters. They're early adapters to getting out. You're thinking that if more people think, oh, this is never going to get paid back. What, we have a default in Venezuela? Who's next? I mean, that's the question, right? Who's going to say, we can't pay? Is that the next question?
We can't pay back our debt here. And all right, let's talk about Alan Greenspan. You remember Alan Greenspan saying, we can pay back any debt? Oh, sure, we can. That means we're going to have to print all this cash out of thin air. And what do people think that means? If we were to print out $22 trillion, $100 trillion, if you want to include the unfunded liabilities, what does that mean for the dollar? That means your dollar isn't buying you anything. You might want to go try to buy a loaf of bread. It might be $400. I mean, it's an incredible situation. There's going to be a price to pay for this, Greg. You know this as well as everybody else, and everyone listening who has a couple of functioning brain cells, I believe, can put this together in their own head. It's not that hard. But again, people are not ready for this, Greg. They don't want to hear it. It's outside their comfort zone, outside their thought paradigm. And all I can say is the signs are everywhere. And, talking about signs everywhere, what we talked a little bit about in the pre-interview here, they'll bring us to war. If they have to, they will do anything and everything to create reasons to borrow cash into existence. If that means another world war for which millions will die, they'll do that too. It doesn't matter to them. They will grease the wheels of this machine that they've created with our blood, with our guts. And we mean nothing to them. And unfortunately, people have no clue. They have no idea of what's really going on.
I have had people on saying, oh, well, I had one person say, not a regular commenter, and I didn't comment back, let's just all admit we missed a lot of great profits in the stock market, and a lot of people were wrong. And you know what, I thought about this later. It hit me. I thought, well, let's just say anybody involved in the market engaged in a criminal enterprise. You're playing with criminals. You think you're swimming in a pool with tadpoles and little baby turtles, and you're in a swimming pool where the sharks are deep. And this whole thing is a crime scene. And you're saying that you're a trader, so you're in and out, and in and out, and in and out. You trade like you have a trader's mind. Oh, I took a loss here. I'm going to make money here. People don't have that mind. They don't ever think I'm going to take a loss. So I was telling a friend of mine this. I said, you think you're going to get your money? Let me make sure I understand this. You think you're going to see trouble, you're going to call your broker, or you're going to go online, and they're going to make your trade before they make the trades of BlackRock. Is that what you're telling me? Yeah. They're going to make your trade before they trade the Goldman Sachs. You're going to beat Goldman Sachs, J.P. Morgan, Morgan Stanley, Citi. You're going to beat those people. Warren Buffett. Mm-hmm. And she just looked at me like, yeah, I know, but this is a giant criminal enterprise, and yeah, it's been good, but when it stops, it's going to stop hard and fast. Am I wrong?
No, you're not wrong at all. It's going to come down very, 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 very rapidly. There's not going to be any slow burn here whatsoever. It's going to be every man or woman for themselves. Everyone's going to run for the door at the same time. And you and I have talked about this a couple of years back. At one point, there's going to be no one's going to want to buy anything. You're going to have something to sell on the market. No one's going to want to even buy it at that point. In a worst case scenario, and with a managed market like we have right now, I cannot imagine a way that we're not running straight into a worst case scenario. You always have to be ready for it. So look, people right now, they're using the stock market, they're propping it up because they're trying to keep people distracted. If the stock market's really high, the world economy must be doing really good. In fact, our economy in the United States must be booming. This is how they think. They're unable to see beyond that, and it's used as a prop to just, manipulate the minds of people because they're all happy and gleeful that they're watching their 401k plays. They're getting richer on paper, like you just referred to. But let's see when that moment comes, when this starts to roll over and this sells off very, very rapidly, what's going to happen at that point? I'm going to tell you what's going to happen. The same thing like last time. People are going to get on the phone with their fund managers or their brokers or whatever it might be, and their brokers are going to try to talk them out of selling. That's the number one thing that's going to happen. And they're going to ride their investments into the dirt. But this particular time, the Fed cannot do anything. There can be no bailout. There can be nothing. The money they lose this time will not come back in their lifetime. Maybe next lifetime in whatever new system evolves out of this. But in this lifetime, the money that people lose this time, it's never coming back. The whole system is going to implode upon itself because it's not being allowed to do its one and only job. It's very sad. Its only job is to determine fair value, Greg. That's the job of all of these markets, but they're managed. And there lies the problem. It's an incredible thing that we can have our Congress people or even our president who is well aware of what is going on here, but doesn't say anything. He just keeps touting the stock market. Okay, you know what? That's all well and good, but it's going to hurt a lot of people at one time. I don't know when that's going to be, and maybe we're seeing the opening act. I don't know. I'll know more next week. I don't know. Maybe we'll get back on in a couple of weeks and talk about it. But watch that bond market, people. I can't stress that enough. That is the biggest tell. In South America, there's another big tell for you. Let's start looking at all this stuff and let's start paying attention and look in the right spots. Don't look where the mainstream wants you to look. Look in the right place.
Gregory Mannarino, TradersChoice.net. I was gleeful, not because of people losing money, but I try to have you on at the right time, and you're on. You're my most valued guest. You're the guy that's on the most, and I think the money always leads to political implications, to financial implications, and what a great time to have you on. We'll see if this unfolds. We'll see if they can stop this bond market rout that is, it appears to be at the beginning. One other last thing that I wanted you to talk about too is that this is record breaking in terms of that we haven't had a 2% correction. I mean, Chris Martenson brought this up, I don't know, several months back. He says, you got to ask yourself, why can't they have a 2% correction? Why can't they have a 5% correction? Tell me, you've got some stats on the corrections. That we are in no man's land. We haven't had a correction in.
Well, okay, let's go over that. This past Friday, the stock market made history. The first 3-month cycle, 3 months that has gone by ever in history where we have not had a 2% correction. We have not had a 5% correction in almost 90 years. 90 years.
The longest time that we haven't had a 5% correction. Explain that. Just make sure that people understand.
Ever. I mean, but so what does that mean?
The longest time period where we haven't had a 5% correction.
We haven't had it. Exactly.
The longest time period that we haven't. Yeah, right.
Oh, I got you. Yes. The longest time span between 5% corrections. We have not seen this in almost 100 years.
And same thing with the 2% corrections. We haven't.
And the 2% is in the past 3 months where we've gone this span of time. So we hit history on Friday.
So just so I understand this, so never in the past have we gone 3 months with the stock market, no matter how good or how bad it is, without a 2% correction.
2% correction.
And then this is the longest span where we haven't had a 5% correction right now. History.
In history.
Well, what could go wrong? They're not manipulating this, are they? I mean, this is an organic market, right?
That's what I'm saying. Let me just say one more thing. Okay, I'm glad we're getting this out here on your show. This is what I believe. These numbers that are being reported by these companies that they're beating on their top line, their bottom line, they're doing real on earnings. I want some independent source to get in there and start looking at the books, because I have no doubt in my mind at all that these numbers that they're put out, they're wrong, they're fake, their accounting practices are not up to par. They're doing whatever they can to make things look shinier than the next guy, and they're all doing it right now. It's like, you know what we have here, Greg? We have all of these multinational companies, Apple included, they're all Enron. They're all faking their books, just like Enron was doing. I have no direct proof of this, but if you put this all together and you say, hold on a minute, there's no money velocity, cash moving through our economy. We're going nowhere. We have an artificially propped up stock market, a debt market that's being managed by central banks, and gold rigging by 5 of the world's largest banks. I actually think there's more than that. This is not real either. Nothing is real. That is what people need to take away from this.
And as an investor, just real quick, you would go buy real stuff. Go get your car title. Go get gold and silver. Go get food. Get your home title. Get cash. You would be in the real world. Is that right?
Yeah, and I'll tell you something else I'd be doing. I'm telling people to start to transact outside of their system. Use gold and sell. Look, if I were to sell my car or sell one of my assets, I would gladly accept gold or silver for it. Get out of their system. I would rather transact in Bitcoin before I transact in these dollars anymore. These central bank units of debt. So start to transact outside of their control. Because if you're transacting and doing everything in their units of debt, well, then you're part of the corruption as well, part of the criminal enterprise, like you referred to before. So look, they have absolute control here, Greg. People think, and I'm gonna say a few things here that might make people angry, but people don't understand that they're enslaved by these world central banks, slaves to them, because they're transacting in their units. They don't want to use anything else. Why do you think they're trying to attack things like Bitcoin, like we've been seeing? I've been a huge advocate of Bitcoin. You know that. I own Bitcoin. I just sold half of my Bitcoin holdings, by the way. I actually publicly said that, not because I think it's going to go down, only because I wanted to move some cash around. That's what I always do. I think Bitcoin is still going to 10 grand here. I called the $5,000 top and then some. But this is why these things are under attack, because, again, it takes the control away from the world central banks who have enslaved you, me, and everybody else here. We have got to start transacting and acting outside of their system. That's it. There's no other. Otherwise, again, they've they've taken over the world already. Despite the fact that what people might want to be saying about a new world order, well, guess what? You slept through it. It's here now. It's really the truth.
It is the truth. And Gregory Mannarino of TradersChoice.net, thanks for coming on and taking us to school. We'll be watching the bond market in the coming weeks. Thank you so much for coming on and being the early Sunday release. Gregory Mannarino, TradersChoice.net. Thank you so much for coming on and taking us to school, my friend.
Great to be here. Thanks, Greg.